The news on the day was overall pretty minimal. We didn't have any fundamental news coming on the day, but we saw a little bit of selling occurring on the action. Now, this is contrary to what, the opinion here on the channel was. This is a little bit controversial to what we thought was going to happen, but overall, this is the movement. Now, we're going to work our way from a top-down approach. So we're on the daily perspective, and as we can still see, you're still technically in that trend. But when we go to like the 4-hour, you can see that we have established on the 4-hour at least a new or a lower low, right? These are some of the trends that you want to see. Now, I'm going to point out some very big levels that we need to be watching. So specifically on the Nasdaq, I believe 12,955 is a very monster level you need to be watching. ES going into S&P futures. You need to be watching what is happening. This is not a level anymore, just so you know. But you need to be watching this 4,100 marker as well. This is a monster level. I'm going to go into exactly why and show you what's happening there on Bookmap as well. But about right there, right? A little bit lower, but you bounced right there at that level. Now, that's a monster level. And how do we know it's a monster level? I'm going to show you right here. So when we jump into Bookmap, you can see as you came down here. And what this does is it shows you level 2 data, but it shows you what's actively happening there. It's like a heat map. So if you're interested, check them out down below. There's a lot of interesting points we need to point out here though on Bookmap. I'm not going to do them all at once, but when you can see you came down to this level, buyers started stacking this overall region. So we saw one buyer here, but then as you got closer, you got bought through, you got a little bounce, and then they established this entire zone from basically 4,100 down to 4,097-ish, right? And it was just monstrous, huge range. And then they started buying you back up and pushing you higher. But there's a lot we need to unpack here and why potentially we could see some sliding happening here. I'm going to tell you what positions I'm looking at, what I'm doing personally. Now, before we get into all of that content, I have to ask you to consider doing 2 things. Consider liking, consider subscribing. Every single day I make videos for you here on the channel. So that's all I'm going to do there. Again, if you get anything out of this, consider liking, consider subscribing. The Instagram link is down below for the short form content, quick news as well, and little tips and tricks. We will also be having a pretty big giveaway very soon. So make sure you go down and subscribe there. So when we get back to this chart, I wanted to talk about what's happening. Now, to the naked eye, as we look here again, I wouldn't even consider there to be a demand here or anything along those lines. Maybe on the 2-hour, you could try to say you have a demand formed at this region right here, but you're not even there yet. So like 40.80 roughly. But when we look here, I think we get a good visual. Okay, so just stay with me. Going back into Bookmap, and again, the link is down below. I love looking at this blue line right here. So this is one of their add-ons, and basically what it does is it tracks some of the hidden orders on the dark pool, okay? And so this basically gives you a good look of what individual whales are doing that are sizing into very large positions, okay? And when you look at what's happening here, it's a little bit concerning with the action that we're seeing to the upside. Now, very rarely, and we haven't seen this type of action in a while, just so you know. But you're seeing when it ticks to the bottom, and I'm just trying to describe it a little bit before I get too far, is that's basically someone sizing into a sell position, okay? Right? Sizing into a sell position over and over. And these are large. This original one was 600. Then we have 1,000, 1,100, and then a 900, and then about 1,200 lots. So, right? Altogether, probably like 4,000 lots right there being sized in by individual buyers, okay? And they could be the same guy, but overall, this is one order. And they started sizing in. So they were sizing in a small position here at lows right about here. And then they started sizing in again, and then here near the end of the day as well, you're seeing another one come in and start to be established. And also, despite this, we saw the CVD, which basically gives you an account of what's happening with volume, kind of just like ping pong back and forth in the red, signifying that sellers still had majority of control. So what does that tell me? That tells me that one, buyers today were non-existent. Okay, that's what it tells me. We're turning green near the end of the day, but buyers so far have been non-existent. But also that has to tell us if buyers are non-existent, this leads us back to the main problem that we've had on every single dip that we've had. Basically going back to the bank crisis, right? So about half a month ago, 20 days, give or take. You're not getting any follow through from sellers. So, and before I go any further, okay, we've talked so much about how technicals and fundamentals are disconnected. In my opinion, you're not going to see aggressive selling. And when I say aggressive selling, what am I talking? Am I talking about this right here? No. People want to keep saying, oh, well, this is a rug pull. This is this. No. I encourage you to go look back. Okay. We need to zoom out. Okay. I always tell people to zoom out. Even coming back into this movement that we had in March with the bank, crisis stuff and what happened with Powell talking to Congress, right? Aggressive drop. But it still isn't quote unquote a rug pull. It's still not very aggressive, like nonetheless, right? Where was the real aggression? Again, do we have short-term memory? I for some reason, sometimes I think we do. Even myself as a trader, sometimes I forget what it was really like. So when we go back to September, remember this, we dropped from 41.60 down to 39.20 in a day. Almost 250 points, give or take. Okay, 2 weeks before that, August 26th, 42.16 down to lows of 40.46, about another 140 points, right? So we're seeing like 100-point drops occasionally here. Not even, no, you're seeing 420 down to, about 100-point drop, which is still big, don't get me wrong. But what about these monster drops that we were seeing back here, right? The big ones that were really scary, and they were the back-to-back-to-back days, right? Again, we have to understand there's been a disconnection with some of this happening right now. And you know what the common denominator is here with all this major downside? Is it came on the backing of big news, whether it be from Powell, PPI, CPI, PCE. There was some type of news that was moving this along, okay? So we need to understand that. And as we've been moving up, yes, the last time we had some volatile move here on the daily chart, right, was right here. Right, this was with what happened with, the bank. This was the banking crisis and what happened with, Powell talking. Okay, now we need to understand this is what's going on now. So before we start jumping to conclusions and saying, oh, we're this bearish, it's time to jump on the bear ship. We need to start, really hammering down. We need to start going short. Again, I encourage patience. Patience. Opportunities will arise. Next week, Wednesday, we have CPI. If you're going to get downside, that's going to be the day. CPI Wednesday next week. Now, could you have some minor downside until then? Yes, you could, 100%. But do I think we're going to drop 100, 150 points in a day? I do not. I refuse to believe that right now. For instance, today's movement, highs 41.34, lows 4,100, a 30-point range. Day before that, highs 41.70, lows 41.14. About a 56-point range, okay? A little bit bigger, but still, we're still not getting that crazy movement that we had before. We need to understand why and what's going to cause that movement if it is ever going to come, okay? That's what we need to be talking about here. And what's going to happen and what's going to cause that is going to be bad news. Actual legitimate bad news regarding data, regarding inflation rising, regarding the debt ceiling, regarding something happening in Russia, and Ukraine and China. Something bad is going to have to happen for that. So I think anyone that's saying, okay, we have to go down, back down to lows. You don't have a case, and I'm going somewhere with this, but we don't have a case to go back down to lows until inflation starts rising again. Okay. Just like we talked about in the beginning of the month. Right? Now, why did we flip a narrative? Because now the talks of pausing, now the talks of bailing out banks and, the Fed giving them unlimited cash. This has stimulated the economy. This has not stimulated it, but it's given new hope to investors. Okay, it's given them something along, nothing can really go wrong. The Fed's going to keep bailing us out. Now, is that the right mentality to have? No. But we need to understand what's actually happening behind the scenes there. Okay, let's go into what's happening here on the options flow as well. Okay, SPY. Okay, this is Qs. Not too much here. Really, we'll go to premium, stack it all up here. There's really not too much. 3 orders above $1 million. The one for December 15th is 7.7, but it's out of the money slightly. It's for December though. We have a long time until then. I will say when we're looking at options, we care about short dated, like 2 months at the most, right? Out of pocket there. SPY. Bigger orders. Again, 700 strike, 465. We're not too concerned about those. The near dated ones are the ones we'll be considering. Again, 435 in the money position. Again, nothing too crazy. Okay, it is to the put side. Some of the ones we have that are here, but again, nothing that gets us excited. Nothing that shows us opportunity right there. Right. Again, IWM has been the weakest of all, and again, we still see the same thing kind of happening here. IWM continues to look weak, and it was probably. If there was any sign from yesterday that we should have taken that there was a possibility downside today, it was IWM, just with how weak it was performing, giving us a risk-off approach, right? So that's what we need to identify there. But the chart we need to talk about there as well. As we look at, VIX, nothing crazy happening here. So that's what we're looking at. Okay. And before we go any further, I do want to also highlight on Twitter, I posted my positions. I ended up getting out of both of these. I had 200 shares of Amazon and AMD. Like, I've been transparent talking here, right? I've been transparent the whole time. Amazon, it shows red, but what the way Interactive Brokers calculates is it shows where you closed yesterday. So if I was in profits $2,000 yesterday and I came out today slightly down, but I was still green on a position, but I was down 500, so I was only at 1,500, it would show negative 500. So you can see my entry was at 101.88. I was at 102.58. So this was still, I moved my stops like 1.8, 1.9. So I still was net green, but it was like minuscule. It was basically break even. So this was like a nothing burger. Nothing really happened there. AMD, I ended up losing because it was below 96 yesterday. I ended up losing around 550 on this one, so a little bit more. Again, I just want to be transparent with you guys. I try to be as transparent as possible. I've been telling you too. You don't want to go heavy on options at highs. Why? Because you're opening yourself up to more risk. So I'm trying to practice what I preach and giving you a demonstration. Right? We look at some of the bigger losses that we've had, right? We've had, huge wins on Tesla. We had like an 8K win on Tesla. We had a 5K win on AMD. We had a big win on, I'm trying to think of all Home Depot. We had a lot of these big wins, but we're trying to mitigate risk with some of these when it comes to getting to these new highs and where we're at. We don't want to be pushing our luck for a breakthrough, and we'd rather be risking less with these options. So again, I'm risking a minuscule amount comparative to what, I'm trying to make as well. Giving you a visual right there. Again, for transparency's sake. Now, we go back in here, and I just want to highlight, again, what were we looking at? And I like keeping these up on the higher time frames because it gives you a really good visual. It shows you kind of what's happening. And again, I am not trying to be biased whatsoever. I have, no positions right now. Position-wise, just completely just chilling out, doing nothing. When we look at what's happening here, you have to identify the overall structure that is happening, okay? And I want to show you all a chart really quick. Now, this is from Discord as well. Duckman, shout out. Love you, Duckman. You're killing it in Discord. But he posted this because we get a lot of questions about market structure. And I think this will be a little bit easier for you to see. And when we look at market structure, we can see there's overall. So we're going to use the one on the right to give you a better just example. So when you're in a downtrend, you're making, lower highs, as you can see, and lower lows, right? But inside this downtrend, let's say that hypothetically this is a daily or a weekly chart to the downside, but in here you might have an hourly chart pushing you back up. Now you have to understand, on the hourly chart, you may look really good, but from a broad trend, what do we trust more? The 1 hour or the daily or the weekly, right? We want to go from a top-down approach. So the monthly is the most respectable, obviously the weekly, then the daily, then 4, 1 hour, etc. So if we look here at the daily time frame and we're clearly in a downtrend, then we understand the overall momentum is towards the downside. Because you can continue to do this. I can go from like the daily down, and I can go from the 1 hour up, and then the 5 minute maybe curling down, and then the 1 minute might be going up, right? So you have to identify this and work from that approach. And so when we look here, and as you come back over here, you can see we're, higher lows, higher highs, over and over and over. But then as you can see, there's trends inside the trend as well. So when I say that, and then we come over here, let's look. If we zoom out really quickly, we can see this is exactly the same of what's really happening here. Okay, exactly the same. And again, it might look like a lot. I'm not trying to confuse anyone. I'm just trying to give you a visual. So you can see, as we look here, the same exact thing that we have going on. Pushing up, higher low, higher high, higher low, higher high, higher low. Pushing up right here. We did not make a higher high yet, but we're still in this trend. When would this trend get invalidated? We have to ask ourselves, when would that get invalidated? When you push and you make a lower low on that time frame. So if we look really quick and we zoom in to where we're at now, right? What's happening here? Even on the daily trend, you're still pushing up. I would go to like a weekly for the overall broad trend, but then we go to something like the 4 hour and we can see what's happened. We've made a lower low here. So we're kind of pushing back down, curling down a little bit. But again, you have to understand what's really happening there. So again, from the daily perspective, you're still just in this movement. And the same thing goes for the Nasdaq. Actually, you did make a higher high, so you understand that as well. But that's what's happening here. And so just so you can get a visual of what's happening underneath the market, so you're not just looking at what's happening here on one day, right? As well, we take a little bit of a deeper dive. And again, I don't want to have an argument. I don't want to get like hostile, whatever. Again, today, 100%. I was wrong. I expected some upside, expected a little bit of a bounce. We just had some downside. It is what it is, right? Again, low volume. Now, the argument here is that we're moving on it's a short week because obviously there's Good Friday. There's, typically holiday weeks. We usually get less volume. Now, what I will say is if you rewind back into Thanksgiving, which I would argue Thanksgiving is there's less traders during Thanksgiving than there is during Good Friday week of Easter. I would argue that we got good movement. We still were volatile, up and down, up and down. So that doesn't mean you have to stay in trend. You have to get less volume. But all to say is you do have less volume. It is a short week. So, that's just one of the things that is taking place right now. Okay. I will stand by that and say that. But again, still less volume, on that sell side pressure. Okay. You get a little bit more volume on Qs, but either way, it is what it is. And so that's what I'm looking at. Okay. Where would I get really concerned though? Where would I start saying, okay, we need to be watching, we need to be vigilant, we need to be paying attention, right? If you start to break below the 12.95 region, that puts you in the area to start being concerned. You haven't necessarily made a lower low on the daily time frame. Really, that level will be about right here, like 12.6. You would really love to get below the 200 SMA, but getting below 12.95 would be a start because you start to get below previous highs. Okay, that's a big thing that we're looking at because when we look at what's happening structurally with this trend, is you're really just mounting previous swing highs over and over and over, especially on the ES. So we'd love to get back below that. Once that happens, I would flip to looking for some potential downside. But again, there's still that banana in the tailpipe, right? With the big curveball, if you will, is because coming into next week, as we go into Wednesday, CPI is going to be the dictator of this movement. And I'm going to tell you right now, this is a hot take. This is my opinion. I don't think CPI has to come out bad. Now, if it comes out bad, it will not be because of oil or energy, in my opinion. And I know you're like, Tyler, what are you talking about? Oil spiking. I agree. Oil is spiking. But if we look at what's happening with crude and we look at what's happening overall in the oil markets, I know this is going to burn your eyes. I just love using a black and white chart now. It's been where I spend most of my time. But if we go into the daily chart here, it's been in this range for quite some time, right? So going all the way back to November, we basically just been trading here. And then obviously beginning middle of March, you dump down and then you bounce back up here near the end of March. Now look, people always hate when I say this as well, but I don't really know how else to say it. Like, this is just my opinion. And I think data goes with what I'm saying. You do not track energy prices. For instance, if you look at your gas station right now, wherever you're at, whatever local gas station you go to, when the price of oil spikes, hypothetically, you went from 66 up to 73, and how many days was that? From the 20th into the 20th, so 7 days, okay? 7 trading days, or 7 business days. Actually, it's just 7 days in general, okay? The price of your gas station did not pump crazy in those 7 days. Why? Because there's actually something called supply and demand. There's a processing, there's logistics, everything takes place. So it takes time for these prices to affect the pump and to affect what's actually going on and the price of what's happening with inflation that may impact deliveries, because that's where this comes from. That's where this stems from, fuel prices, etc. And so when we look at that, you have to understand that. But I do believe, I 100% believe a lot of people are anticipating energy prices to negatively affect this CPI report, when in all actuality, I think you might get some lower numbers on the energy side of this on CPI and potentially PPI. Why? Because really, if we look back from the 30-day period going back, 45, 30 days, you were dropping drastically on energy. So I think there's a possibility on CPI that could come in better than expected. Now, that being said, I'm not going to be YOLOing, going heavy on CPI data. I'm not that big of a believer, but I'm not going to be under the assumption that CPI is going to come out hot because of what is happening with energy. So that's what we need to be identifying. But what I will say is the second oil, and it looks like oil is going to want to try to get above 81. The second this thing gets above 81 and starts pushing to the upside, you're going to be in trouble. And I think CPI and PPI will be in deep trouble. That's the main thing that's going to be concerning for me. And that's where we could start that little spiral to the downside. Okay. So that's what I'm looking for fundamentally, because fundamentally and technically, this will directly impact CPI and directly impact stocks. Okay. Now, it may not happen immediately. It may be a lagging indicator, but it will happen 100%. If this starts to break above, it will be a major problem. The question is do you stay here or do you start to drop? Okay. For instance, as well, UBS just put a price target on US crude at $100 a barrel. Just going to say, right? That's pretty terrifying, not ideal. Now, again, even if we make it back to 90, that would still be brutal and tough for our inflation numbers. That's what I'm looking at there. I hope that really makes sense. If you have questions about this specifically, please comment down below. I would love to answer. Even if you're like going to troll, we still read your questions. We may just like mute you on the channel. But yeah, we still like are going to read your comments. So hopefully that makes sense. The point of this today though, again, what you know, sometimes you guys hate it. Sometimes you guys love it when I say it. Patience, patience, patience. And then we need to be waiting really for Wednesday, because Wednesday is going to start pointing us in a direction. And if CPI comes out cooler than expected, you're going to see buyers flow into the market. I'm just saying, you're going to get mad. People are going to dislike it. And again, I'm not even long. I have no skin in the game right now, but I'm going to tell you, if you come into next week, CPI comes out good, cooler than expected, upside will happen. That's my opinion. That's my take. More videos coming out. See you guys tomorrow. Have a good one, traders.